So if you had one piece of advice or one concept or something that anyone listening to this can take away from and learn from your story, what would that be?
Yeah, I mean, it's buy real estate and wait. Spend less, make more, and invest the difference is how you build wealth.
Yeah.
So if you buy a rental, you let it pay for itself and you just wait. And you do that 3 times. The average person can this was our whole pitch. Anyone can buy 3 rental properties. You set your whole retirement fund for the average person.
Hey, this is Jordan Hill with Dirt to Sky Business Podcast, and I would like to thank Collier Law and Compass Visuals for sponsoring today's episode. Today, I'm here with Trevor Howard with Stacked. How are you?
Good. How are you doing, Jordan?
I'm doing really well. Thanks for being on here. You're kind of a local celeb in the real estate world, investment world.
That's a strong word, probably. Gabe is a local celeb.
You know what's a funny story is I actually have a brother named Gabe and a brother named Trevor.
So, oh, really?
Yeah.
Okay.
Yeah. Funny. So again, thanks for being here. You have your own podcast, Deal Junkies, and you're an investor all over Oregon, you know, your own company Stacked. And yeah, I'm excited to dive in and hear more about it.
Yeah.
Yeah.
Do you want me to start from like how I got into that, or?
Yeah, I would love to hear. Yeah. Start in the beginning. Like who are you and your journey?
To give listeners a little bit of a background. So right now I'm co-founder, and then I run head of acquisitions for our company, Stack Asset Group. We're a real estate company. We buy multifamily assets and build ground up. We have about $100 million in assets under management that we own or manage. And then me personally, I own something like 300 units or doors or whatever you would call it in the real estate world. But going way back, I grew up in Salem. Like, I love Salem. I still live here. Went to Blanchette Catholic High School and then went to like Whitaker Middle School and all that. Eventually got an engineering degree, and I was working as a project engineer. So we were building missile silos and nuclear reactor structures.
Wow.
And I did not know anyone who invested in real estate at all. Have you heard of Bigger Pockets podcast?
I have, yes.
Yeah. So I came across the idea of like financial independence. Have you heard the acronym like FIRE?
I haven't.
Okay,
no.
So it's financial independence, retire early.
Okay.
And it's a bunch of people who invest in like the stock market and like the S&P 500 and their 401ks.
What's S&P?
Standard & Poor's. So it's like an index for the top 500 companies that you would invest in. So if you go on like a stock ticker, it'll be like one of the main ones, the Dow and the S&P.
Okay.
But it's essentially like you have an index fund that's a pooling of stocks. So it's a diversified portfolio. It will give you like a 7 to 10% return. So most people that invest in like their 401ks and have a financial advisor, they put a lot of their money in this.
Okay.
So this group of people that go by FIRE, essentially they just slam all of their income into this thing and live super frugally. Okay. And then they retire really early. So financial independence, retire early.
Got it. Okay.
So they live off like, I don't know. And there's different levels to it, right?
Right.
So like I was like, I really do not like engineering and sitting at this desk all day.
Yeah.
So I came across that idea and I was like, oh, that's really cool. And I started living off like 12 grand a year when I was making 50. And I was putting the rest in my 401k and investing it in the S&P. And I was like, okay, in 10 years, I'd probably have $1 million. And then I can live like passively off 40 grand a year. And that amount will stay. And I was like, that seems like plenty of money since I live off 12 grand now. And now you have a family and kids, so you're probably like 40 grand. Like, how do you live off?
Yeah. I mean, that's definitely frugally. You know?
And I was 21, 22 at the time.
Yeah.
But then I came across like the podcast Bigger Pockets where they're talking about real estate investing and these people buying houses. I'm like, this is weird. I didn't know you could like own real estate and rent it out. And that was like the first time I'd kind of heard about it.
Light bulb went on.
Yeah. And the most relatable story, and all they do is interviews like this. So they interview investors and they just share how they built their portfolio, which is like what we copied with Deal Junkies essentially.
Yeah.
So I came across this guy and he was like buying a house and renting out by the bedroom. And he was talking about how much money he was making doing it. And I was like, oh, that's really cool. And I was already living with my friends.
Right.
So, because I was trying to live super cheap. So what I did to live super cheap is we all got like a 6-bedroom house. And this was in like Clackamas, West Lynn area at the time. And I took the room that had no wall on it, and I went and spent $200 and built my own wall to try to save $200 a month in rent.
Yeah, okay.
So I was literally like counting pennies to like save up that much. So I took it too extreme that you don't need to do.
Yeah.
But I was just living with them, so I pitched them. I was like, hey, would you just want to pay cheaper rent and move into a house I buy? And they were like, sure.
Yeah.
So I move in there, and then I start living for free while making money.
Right.
And that's when like the light bulb clicked, because now I'm looking at Zillow. I'm like, my property's going up in value. And then I see my statement every month. It's going down. And I'm like, holy crap. Like if I do this a couple times, I reach my goal in like 2 years of like my passive income of 40 grand. Yeah. Basically what got me started. And then I realized I need to do that as many times as possible. So I bought my first house at like 22, and then 10 months later, I just bought the same exact house like half a mile away with more bedrooms so I could increase cash flow.
Yeah. Wow. That's awesome. And how old were you at that time?
So 22, I believe. So that was back, I'm 29 now. So I've been doing this like 7-8 years.
Yeah. And so at what point did you step out of the engineering world?
After I had those first 2 houses. So I worked as an engineer for like a year and a half, maybe. And then I had like 30 grand coming in. I was living for free while living off 12 grand. And I was like, I retired. I hit my goal. I'm 20 or 24 and I'm retired.
Yeah.
Which made people really mad, because I would tell all my like parents' friends like, oh yeah, I'm retired. And they'd be like, what are you talking about? You have like 20 grand. No, you're not.
Yeah. Oh my gosh. That's so good. What were kind of your next steps? I mean, were you just realized you want to keep doing this?
Yeah. So a lot of people were asking me about it, because I was like, this is amazing. Why does not everyone do this?
Yes.
And then, so I was telling everyone about it, and then people were asking me to help them. I was like, here's how you analyze investment, do all this. And I knew like super rudimentary level at that time.
Yeah.
So I got a real estate license, because I was like, oh, these people are asking me all this stuff. I'll get a real estate license, keep buying my own deals. So I did that, started helping people, quit my engineering job. And at that time, my plan was to do about 1 a year. And then when I quit my engineering job, I didn't know how loans worked. So I no longer qualified for anything at all.
Oh, yeah.
So that kind of ruined that plan. And I kind of kept learning how to do creative deals, partner with others and whatnot.
Okay, so you started partnering with others.
Yep. So I started like learning how to partner with them. So I would go, they would like get their owner occupied loan. I would broker the deal and then pitch it as the down payment. And now I didn't have to qualify, but I would find, manage, and run the deal so that they wouldn't, and they didn't need to bring money essentially if I was pitching a down payment. So we started doing deals like that. I heard you could buy commercial real estate like without any money. So I started writing handwritten letters to all these like owners in Canby between like, I don't know, it was like 12 to 30 units. And then like put one under contract and didn't know the steps and figured out how to like piece it together. We don't really need to dive into that too much. But at that point I was 25. I had like $500,000 in cash. I had like 32 units. I was like, I never need to do anything again, was my thought. And I completely stopped working for like 6 months and did nothing. And I realized that was really unfulfilling also.
Right.
But at the same time, I read this book, and it was like, once you've made enough money, you need to stop being so frugal. So I was still doing the 12 grand thing.
Do you remember the name of that book?
It was called, I want to say it was called Happiness.
Okay.
But I'm not sure. It was, I would not recommend this book. It made me lose so much money. So what it was a good concept in the end. But what I did was I was like, okay, for the next year, I'm going to buy anything I want and I'm not going to track any of my spending.
Got it. Just for personal?
Yeah. Okay. Well, that was the problem is I was a new investor. I didn't fully understand how to track all my properties at that time. So it led into my property portfolio.
Right.
So I started doing that. My portfolio was really good and it cash flowed, so I wasn't worried about it.
Right.
But then at the same time, I bought 58 apartment units of extremely heavy value at about to be condemned buildings, which was the biggest deal I had ever done. And I misappropriated like the budgets on it.
Okay.
So at this point, I'm no longer working, bringing in no income. I have like a little bit of cash flow to live passively off. I have $500,000 in cash, so I think I'm just set for life at that point. Yeah. So I stopped recording my income. I spend a ton of money. So I, deplete a little bit. That wasn't really a huge problem. I also could have just done that for like 2 months and then multiply it by 6. And I would have been like, oh, this is how much I would like to spend on the year rather than not looking for a whole year.
Right. Yeah. Yeah.
And then I go into one other deal and I get like $250,000 stolen doing this deal. At the same time, I'm spending all this. At the same time, I bought this heavy value add that I misappropriated.
Right.
So I spend through all my $500,000.
Yep.
And I still owe $300,000 that I put on lines of credit and credit cards as I'm having no income. So I'm spending like 30% in interest on like $200,000.
Yeah. Oh my gosh.
Yeah.
What were you feeling and thinking in that moment? Like, were you thinking of just like giving up and going home? Did it motivate you?
No, I mean, the problem I ran into is I didn't try to solve my problem quick enough, so it prolonged longer than it needed to.
Okay.
The simple solution was I had all these assets and I could have just sold a couple right away and solved the problem.
Okay.
But I was so attached to the idea of not selling anything that I was trying to get out of it in other ways where I was like, let me just sell my first home that has $200,000 in equity and I can pay down this thing and problem solved. Yes, I lose this house that's cash flowing, but I have all this other stuff. That would have been the simple solution. What I did was just trying to make more to pay it off, which ended up working. But back to your question of like how I felt, it was stressful because I was like, how am I going to pay this money? And every month I'm writing like a $20,000 check, a $30,000 check, and then of money I don't have that I'm digging into. But I had read, like I'd continued learning and reading, and basically every single real estate book or business book I had read, like someone went through something similar or at bigger scale. And at that time I had met Gabe also, who told me about how he was flipping. I don't know if he talked about you guys with this, but he was flipping houses and lost $2.1 million that he did not have. And I'm like, wow, you know, like
so he hit that point too.
Yeah. And his was in a partnership. So it was like 700 or $1 million of his. So I'm like, oh, my problem isn't that big. Like, I listened to how he solved this thing. And I'm like, oh, mine is only $300,000. Like, this is just a small problem compared to what people deal with. So then it was just like slowly taking like a day by day step to kind of dig out of that, fix the problem. And, you know, I learned a lot of lessons about like partnerships and losing money and how to properly value properties that I use today. So like, I mean, it was essentially like paying for college.
Right.
But
Yeah, exactly. But probably a better ROI.
I think so. Yeah. Like my engineering degree was great, but like that is very specific knowledge and information that I still use.
Yeah, exactly. So with the $250,000 that was stolen from you, was that just from a partnership that had been shouldn't have been chosen?
So that was one of my really good friends. We were doing a really good deal actually, but it was a bad partnership for it. So he was doing a bunch of business with us, and then I kind of got sold on like his experience and whatnot that he didn't really have.
Yeah.
Gabe gave me the advice. He's like, don't do any of that. And I did not listen and learn my lesson.
Ooh, lesson there. Yeah.
So like I got money stolen from, just spent on our personal credit card and furnished their own house, stole money on the deal, bought him a truck because we were really good friends. And then just, he was like, I'll pay you back in 30 days. And then like 3 years later, I'm like, hey man, can you?
It's more painful when it's a personal friend that you just want to do business with and, you know.
Yeah, because we were good friends. So I like most people like would pay you back. Like I would still do these same things for my friends, but I can read the person better now.
Yeah.
So it's like, yeah, dude, if I'm sitting on this cash and you need it for 30 days and I'm not using it, like no problem. But like the problem was they were just lying about how much income they had, how they were going to pay it back and all this stuff.
Yeah.
And that's just like, you learn there's just people out there like that.
Yeah. Do you have any guidance? Because, you know, there are people of all industries listening to this, and many will, the time will come when they are choosing a partnership in some capacity. Do you have any advice on like what to look for, what to listen to?
Yeah, experience is the biggest thing. So like my partner could talk the talk, but if you looked at the track record of everything that happened and actually dived into it and I'd done my due diligence, I would have realized there was no track record, no experience, and there was only burned bridges the whole way. Yeah. And that's what you continue, like this is a local person, like you can see it still happening. And like,
right. Yeah. So would you call those kind of like calling references?
Yeah, you would. And then I would just do more of a test run. I wouldn't dive into all these things at once and give them access to all these things. I would do just a little piece maybe, because like partnerships are my favorite thing and how I've made the most money. And we have a great partnership today. But like that started with like Gabe did it the right way with me, where he's like, let's do one deal together that's really small and see how it goes that I fully control. So like if I was in that situation, I would have took more control so I could have managed the downside better rather than how I did on the front end.
Right, exactly. That's a painful lesson, but thanks for sharing that, because I think that will help many. Yeah, exactly. I met you a few years ago. I don't know if you remember that, but I remember that. And I remember at the time you had said, I own over 100 doors. And then so right now, a few years later, you owe you
I'm at
own
like
over
300 or so. And
I
then
mean, it's really picking up speed.
Yeah, because
Yeah.
so our goal with our company is to create a company that has a $4 billion valuation over a 10-year period, which is like an insane thing to say and think about.
Yes.
And like people don't comprehend.
Like, yeah, I mean, the average person, and I mean, I'm one of them. That sounds like, man, does he have a silver spoon? Like, is he riding on coattails? That is kind of the natural thought because it's such a big goal. But you've just started sharing your story where it's like you were making what many make. You were living frugally when other people are,
Yeah, and
$30,000, what do they call it? 30K millionaire, where they make 30K and they try to look like they're millionaires.
Yeah,
You
like
were
I
not
drive a
doing
Prius
that.
today still. So like I'm taking all my money and just like
Yeah,
reinvesting
so
it.
smart.
But like with what we're doing today with like that goal,
Yeah.
it's came down to I'm too scared to set too small of a goal because I've learned if you think big enough, like you will potentially do it. So the people's biggest problem is thinking too small on these goals. And like if you're thinking like Elon Musk is sending people to Mars, like we can buy some real estate. Like it's not that complicated.
Right.
And there's already people that have done it.
Right.
So it's not a money thing. It's more so like this is what we're really passionate about.
Right.
And we want to play this game forever.
Right.
And this is something that we conceive that we can do. So like let's all work together and try to do it. Like when I was buying my first property, my goal was to live cheaper.
Yep.
Then my goal was to like reach financial independence, then become a millionaire, then buy 100 doors, then so on and so forth.
Right.
And I realized by setting all those goals, like they were achieved, but like they were potentially too small at that time.
Right. Yeah. When did you realize, even though you had hit these goals, which was great, but when did you realize that it actually was limitless?
I think it's more of a faith thing too, because like I've just seen other people do it and tell me that I look up to, and that like that's the advice that I've taken to heart. Yeah. And these are people I don't even know. Like I'm just listening to podcasts, reading to books, and they're all saying, do not set your goal too small. Like if your brain can think of it, you can do it, but you have to truly think of the way to get there.
Yeah, I think that, I mean, clearly you're talking about the things you read, the people you listen to, the people that you're around are showing you this and influencing you in this way, which is awesome. And, from what I just said, like the American culture, the average American that's on their salary and lives above their means, which I'm guilty of too. The average person's going to think that's not attainable, and they're just going to listen to what everybody else does and try to keep up with the Joneses. And what you're talking about is something very, very different than most, but it just goes to show, like, that's what it takes.
Yeah. And like, it's not the right thing for everyone. So like, that's what I want to do. It's not right nor wrong. If someone likes working a job, like we have people that work for us and they're awesome. Yeah. And like, we need those people and they're helping us reach this vision. And they're like a big part of it. Like they do more than I do a lot of the times. Yeah. So like, none of this is like, not everyone has to be an entrepreneur. It's not what makes everyone happy. But like, for whatever reason, this is like what our group of our 4 partners has decided this is what we want to spend our life doing. Right. Yeah. So finding where you fit in the puzzle and, let whatever you're good at, whatever you're strong at, that's where you should be. Yeah. Yeah. There are so many people that look at investors and look at, people like you and listen to Bigger Pockets and everything. And it sounds amazing and exciting, and they think, maybe I could do this. And those people also, and I know many, and again, I am one of them. Yeah. That say, I want to invest. I want to be an investor. This is my goal, and it stays there. Like that, they don't get from A to B. Do you have any insight on why? Yeah, let's talk about yours. So it'll be a good example. So like, why do you, because you're a real estate agent, you know real estate, you come to the investor meetup that we do. Yeah. So like, why do you feel like you haven't bought your first deal? I think because what I bring to the table, actually the last one I went to a few months ago was really, really insightful for me. And also, I felt discouraged when maybe I shouldn't be. So it's kind of like I need to overcome that. Whoever the speaker was talked about 3 components to investment transaction or partnership. Okay. Actually, it was a different word, maybe before partnership. I need to look at my notes.
But it was talking about you're the person that one of the three is you bring the money.
You find the deal, you bring the money, or you operate the deal. Yeah.
Yeah. Find the money, bring the deal, or what was that?
Operate the deal.
And so that is when you're first starting. Step one is to be one or more of those three. Am I remembering that right?
Yeah, that's a way.
Yeah. And so I only feel like I could right now at this time bring one of those pieces. And my thoughts are, is that enough? Who would want to work with that? Can't anybody bring that? Like anybody can find a deal in my mind. And so that's how it feels. So then it's just like.
So usually as a beginner, it's fear of starting, fear of tenants. I don't think I have enough money. I don't know what I'm doing.
Right.
So like you feel like you have enough money then. And you could just go put 20% down and buy a property.
I don't feel like I do.
Okay.
I mean,
So,
I have a business that's only been around a few years and I don't live frugally. So a lot of it is just I'm in my own way.
Yeah. So let's think about this then.
Yeah.
So you don't need a lot of money to start investing in real estate. Like I became a millionaire while making $50,000 a year through investing. So I didn't have that much money to invest.
Yeah.
So like for you, you have a cheat code of being a realtor,
right?
Which is a really cool thing of you get a commission that is negotiable on a deal.
Right.
So let's say you're partnering with someone who's putting 5% down and you negotiate a 5% broker fee. You now need no money to buy this deal. So like you just bought a property with no money using a partner in that, and you can do that an unlimited amount of times. So like you don't actually need money to buy real estate always. A lot of the time you do, or maybe that property doesn't cash flow and you got to put money in later or something like that.
Yeah.
But if you're thinking your barrier is not enough money, the easiest way is house hacking. And what I mean by that is you use an owner-occupied loan, you buy a single-family home, duplex, triplex, fourplex, you live in it for a bit, you move to the next.
Right.
Problem you'll have is like you're established, you like your lifestyle, you like your family, so you're like, I'm not going to go keep moving.
Right.
So if your barrier is, I don't have enough money, I feel like right now.
Yeah.
Now you have to do other ways. So that's partnering with someone who's willing to do that.
Right.
And how old's your oldest kid?
15.
Okay, so that's a ways out. But like once your kids become 18, I would have them go buy real estate. You fund it and co-sign it, and you can buy deals all day long.
Yeah.
This strategy is so powerful. Like if you start and have delayed gratification, you can build a $10 million portfolio extremely easy. So like let's say you buy a $500,000 home today, and you do that every single year. That $500,000 home in roughly 10 years probably doubles in value based on the history of what real estate has done.
Right.
Your payment stays flat, your rents increase over time, and you can continually refinance these things. Like you'll spend on that home, like if you partner with someone, $0. If you buy it yourself, maybe 20.
Yep.
So over 10 years, you spend $200,000 to create $10 million of net worth, probably after loans are paid down and it goes up in value. And you're just buying properties on long-term fixed rate debt with these like owner occupied loans, and it's super simple.
Right.
Anyone can do it.
Yeah.
But like back to you. So like you don't think you have enough money, right?
Yeah.
So then I would find a partner, or I don't like this for beginners, but you can start doing like creative deals where you, and this gets easier as you learn more, but you can do like seller carries and all these other things to buy deals with not your own money or no money or however.
Right. Yeah.
But for you, then I would find the right partner who wants to do it, because you look at the market, so you know how to find the deal.
Right.
You're smart enough that you could fill it with tenants. You're bringing all the money now through your broker fee.
Right.
All you need them to do is be willing to live in the property and co-sign a loan with you.
Yeah.
Or if they qualify on their own, like you probably qualify because if you're 2 years into the business and you guys are doing well.
Yeah.
Like, so you don't really need that much from them. You basically have everything you need.
Right. Yeah. After the purchase, do you just pay the investor back with like interest?
So,
or do they stay in the deal?
The way I'm saying you do it is like through a part. So your problem is you don't want to spend a lot of money. So you want to go the owner occupied loan route. You're not going to live in the property. So that's why you find the partner who will for a little bit. So what that could look like is they, if it's a younger person, like they live in one bedroom, rent out all the bedrooms, you could go that route. Or you buy a fourplex, they just live in one unit and pay your partnership, right?
Yeah.
Money. So there's like literally dozens of ways to do this. It's more so like what fits. Who do you have that wants a partner? Are they a good partner?
Right.
What situation do they want to live in?
Yeah.
And then it's 100% negotiable at that point. Like you guys could put 50-50 of the money. You could put 100% of the money.
Yeah.
You could get your broker pay, like that fee paid back out to you later over cash flow or at refi. Like whatever you guys think of, you can do.
Yeah.
But like money is not the problem. It's the most abundant resource on earth. Like you can, they just print unlimited amounts of it.
Right. I think that's just mentally the hardest thing to get over, especially, you know, depending on someone's situation, how they were raised, everything that they were taught.
Mm-hmm.
That's a
most people are told to not do this. Like, so like my parents were telling me like, why would you buy a rental property? Like you're going to lose all your money. You're going to do this.
Yeah.
But like I would look forward to the people that have what you want and see what they did rather than taking advice from the people who haven't done it.
Right.
And your first deal will be the scariest deal. Like I was terrified when I was 22 and signing on $400,000 of debt. I was like, what if they don't pay me? What if this burns down?
Yeah.
What if, and like we've had all that. Like we just bought a storage complex 1 month into owning it. It burned down. Like we spent $2 million in this place, but like insurance covers that and then you're good. Or like the first time I lived with, I've had to evict tenants when I was self-managing. We've had tenants sue us. Like we have hundreds of tenants. Like this stuff is not problems.
Right.
People, it's just learning how to deal with it. And then once you get property management, like I don't deal with tenants at all anymore.
Yeah, that's really good. Like truly anybody can do it if their mind is open and they surround themselves with the people that have done it. And just realizing there's no, you know, even for me, like I do the same type of transaction day after day after day. And it's kind of mind boggling to realize that there's more out there.
So
a lot more out
think
there.
about this. So you are a real estate professional too. So you get the real estate professional tax status. Do you know what that means? Okay. So real estate professionals are the only people who get to do this. So if you're an investor, you're an agent. I don't know if a mortgage lender counts, but so you get to carry over 100% of losses into your active income.
Oh, okay.
So what that means in real estate, you have this thing called depreciation. It's not on your primary home. It's only if it's an investment property.
Okay.
You get to take the value of the property minus the land, divide it by 27 and a half years and write that off every single year.
Oh,
so that might be $14,000 a year or something like that, 15 on a single family home. Cool part is you can accelerate that to like the first 5 or 6 years. So you can have $100,000 write-off on a property that cash flows for 5 years. So that means you make $100,000 in your job. You're paying 30 grand, 40 grand in taxes, whatever it may be. You buy this property that makes money in your pocket, but on paper shows $100,000 loss. You get to cover up all your active income over here and pay $0 in taxes.
Wow.
So like as a real estate professional, like you have to buy real estate. Like you have such a cheat code to building your wealth and growing income.
Yeah.
Like you have to own more of this. So like even if you own a property that loses money, but it still just pays down principal, you will make more money in your active income over here.
Yeah.
While it's going up in value.
Right.
And then like as you refi it over time, that's tax-free money too.
Boom. Everyone listening to this.
Yeah. Like for the average person, like you don't need that much money. Figure out a way to buy that first rental. And if you can do your first deal, it becomes easier from there. The first one is the hardest deal. And then if it worked well, just do it again. Like you don't have to overcomplicate it. You don't have to buy multifamily. You don't have to build a house. Like you can literally, it's so simple. It's you buy it and then you wait.
Yeah.
Like that's it.
Yeah. Oh my gosh. So once you started gaining all this experience, when did you decide to start your first business with this?
So I went the opposite way I started investing before I had like higher income.
Okay.
So most people make money and then figure out how to invest.
Right.
And I was making no money and trying to invest, which makes it way harder. So I'd recommend trying to increase your income and then invest that income. And it's way easier to make money when you have money to invest. But so I was doing the real estate brokerage thing and I was a real estate broker and that was like my kind of business, like like entrepreneur type of thing. And then I started reading business books and learning how like you get clients and scale a business and do all that. So we came up with this company Vesta where we help people build and scale their real estate portfolios. So essentially we were just taking what we were doing and then teaching people that were a few like steps behind. So we would go through their personal plan. What roadblocks are you having? How do you take these steps? And then we would get paid through brokering the deal. And so we were doing that for a while. And then at the same time, we were building our own real estate portfolio. And I went, like I was saying earlier, I went to like that Alex Hormozy conference and he was like, if you're a new business owner, it's already hard enough to run a business. And every new person, you get rewarded by jumping in and taking the initial risk and starting something new as an entrepreneur.
Yeah.
But then you keep repeating that action and starting new businesses, which is what almost everyone does. And like every new entrepreneur has multiple businesses when you should just have one, because it's already really hard to grow and scale a business. So you want to have your full focus. So like once I grasped that, we stopped doing this over here because we were making 80% of our money and 20% of our time on building our portfolio, and spending 80% of our time and making 20% of our money on this business over here. So we pivoted kind of what we were doing and just canceled. We had like a plumbing company and all this other stuff, and we canceled all that to just focus on building our real estate portfolio and turning that into the active business.
Yeah. Austin Chevron, who's an agent at our brokerage, and he coaches my team. He drilled into our head, when you split your time, you split your money. And I was like, dang. So I think it's kind of that same idea. Like if you're doing, 20% here, 20%, like you can't get the full amount of ROI and money and income back as if it was all channeled into one.
If
so
you
that makes
focus
sense.
on one, it starts to multiply, because you have your full focus here and you get the exponential growth versus having all these half-done things.
Yeah, exactly.
And this is everyone's mistake. Like everyone that's starting a business does this. Like, and we still fall into the trap of like, oh, we should do this, and then we catch ourselves. No, that's not what we do. We buy existing apartments and we build apartments. That's it.
Is it difficult to turn down opportunities that before you'd be like, yeah?
Not anymore, because we have the vision. So it's like we're all on board with this, and like we're very clear on what we're doing. Like, so our whole thing is we ask ourselves, does this help us stack performing assets? And if the answer is no, we don't do it.
Got it.
So it's like just a guiding light of, does this get us more assets and get us to that goal, and just staying to that. Right.
So you essentially closed down Vesta and then started focusing all your energy in,
and that was like, to get that on board, like Gabe had like a $250 million portfolio, and he has multiple businesses. He's at the point where like those are running without him, so he can do all that. And then we have Mark, who owns Skyline Builders, and then we have me and Dane starting this company Stack, essentially from we just conceived the idea, and we're like, we have all these things, and we start working on it. And we're literally like working from our bedrooms building this thing. And now we're in an office, but it's kind of cool to see like, it's just me and Dane sitting in our bedrooms on our laptops, to now we have like all these employees and all this overhead and office space. And it's like actually worked from like just an idea to rolling it forward. And then we have Mark now fully bought in on it. We have Gabe fully bought in. It take time to like acquire all these assets and like get them fully to see the vision.
So and you've done it in such a short amount of time. I mean, honestly.
Yeah. So... I've been doing it for 8 years in some way. So it's been like, the goal has always been acquiring more real estate. So I've been learning the things and doing the things that kind of taught me the lessons.
It wasn't on accident, for sure. Like,
no,
it didn't just happen.
Like the big thing is like continually setting goals and then like keep on doing that, and you can push it forward.
When setting goals, do you recommend at first setting that big goal, or do you think the way you started doing it at the beginning was one at a time?
It probably depends on the person. So like for where I'm at now, if I would have started with my goal now, I would have just never done anything, because I couldn't have conceived the next step. So like I think it worked out how I did it, but like it's to each individual, there's no right nor wrong goal. It's like, what do you want in life? Most people do not take the day to go think about what they want to do in life, and they live day by day just going through the motions. So once you step back and figure out what you want to do, you'll have so much more clarity in setting those goals. So like, it really doesn't matter whatever anyone wants to do. They can truly do it if they think about it, but most people don't think about it. So like quitting my engineering job and not being in the grind of the day-to-day gave me the space to like see. I got to see what that life looked like. I got to see what it was like to do nothing for 6 months and then like think of these things. So if you had one piece of advice or one concept or something that anyone listening to this can take away from and learn from your story, what would that be? It's buy real estate and wait. Like spend less, make more, and invest the difference is how you build wealth. So if you buy a rental, you let it pay for itself and you just wait, and you do that 3 times. The average person can this was our whole pitch. Anyone can buy 3 rental properties. You set your whole retirement fund for the average person, and that will take you maybe $60,000 over 10 years to do.
I feel like that sounds doable, and Awesome. Well, it was really fun having you on here. You are such a wealth of wisdom, and I really look up to you, and I know the community does as well.
Yeah.
So
thank you for having me.
thanks
I appreciate it.
dropping all of that. That was awesome. Thank you. Well, if people want to learn more about you and your business, where can they find you?
So you can go online and look at stackassetgroup.com. And then if you want to hear about like the deals we're doing and all that, we have a podcast called Deal Junkies, a real estate podcast. It's on all platforms that you can search.